Okay, everybody, it is me, Gregory Mannarino. It is Tuesday, June 14th, 2022. Let's sit back and enjoy the shit show. I don't know another way to put it. I'm laughing. People, what we are seeing right now in the debt market is unprecedented. I am not kidding. In my opinion, we are now clearly seeing instability in the debt market. The real question is, what are they going to do about it? How is the Federal Reserve going to stop the bleeding? There's a few things they can do, and it's going to be interesting to see because, again, the situation is we have surging inflation. Pretty much everyone knows that, right? Can I get a duh, please? If the Federal Reserve tries right now to get into the debt market and start buying, clearly we have a substantial sell-off here. Something you and I have known was going to come from a long time ago. Now, if the Fed decides to try to get in here and start buying even more, one way or the other, off balance sheet, on balance sheet, that's going to exacerbate the issue with inflation. People are already getting crushed, and you know better than anybody out here that this is all by design. It's an engineered mechanism to wipe out an entire class of people, keep them under pressure constantly in a state of fear and panic and everything else. Well, it's clearly working, and it's very sad to see, but it's seriously going to be interesting to see what the Fed does now. Today just happens to be the first day of the Fed's meeting, and tomorrow we're going to get their announcement on monetary policy. I actually can't wait to see what they're going to do. 50 basis points, 75. There's a lot of talk about a 75 basis point hike. Anything is possible. The debt market has, in my opinion, you're entitled to yours, is now unstable. Is the Fed going to do something dramatic? Well, like I said, we'll see how it plays out here. And I don't know. We will act accordingly. Let me just back up a minute here real quick. Up until recently, this debt market has been rock solid stable, despite the fact that this market has been, in my opinion, what looked like a normal corrective phase. That's exactly what was going on here, people, okay? A normal corrective phase. Now we have instability in the debt market, so there's a whole new set of dynamics. I've explained to all of you what I've said over the past several months that I believed this market was going higher. Based upon data at the time, based upon stability in the debt market, we were getting a nice, slow, steady slope with regard to the debt market or the federal funds rate being raised. You would expect, of course, to see yields rise, and it was doing so in a controlled fashion. What we have seen as of late, and I mean really literally just as of last week, is instability in the debt market. If in fact the debt market would have remained stable, there's no doubt in my mind at all that this market would have gone much higher. But as you know, okay, anyone that studies this market who realizes the dynamics behind it understands that things change. And when things change, you have to change with them or you'll fail. You can't allow this to happen. So, yes, in my opinion, and you are again entitled to yours, we have been in a normal corrective phase in this market, which is bullish up until recently with this instability now in the debt market. It's clearly unstable to me. And like I just said in the beginning here, let's see what the Federal Reserve does. Now, with that said, understanding that we are clearly, again, seeing instability in the debt market, this is a game changer in many, many ways. Is this market going to hit new record highs by the end of this year? I think it's highly doubtful now. Because why? Obviously, instability in the debt market. We went from what appeared to be a normal sell-off, a normal corrective phase. I mean, people, look at this. I know a lot of you are freaking out here. But the S&P 500 just literally fell into a bear market. We have not even been in a bear market up until yesterday with regard to the S&P 500. Anyway, look, I understand a lot of you are not pure market people. You don't live and breathe it like I do. And, you blow back and forth with the wind here, listening to this freak and that freak. And yes, I have called out these other YouTube crash callers every single month for years. They have said, oh, this is it. It's going to happen now. Oh, it's happening now. They've been wrong 100% of the time. And then eventually, they had to be right. I mean, duh. I mean, you say something over and over again, and eventually it's going to happen. We all knew this market was going to melt down at one point. And again, let's see what they do. What the Fed does with regard to try to stabilize the bond market. They have to do it. Either that or literally, this whole thing is going to literally melt down. And I mean fast. Look at how the market has reacted to the instability in the debt market. It's had a couple of days of substantial drops. And yesterday, the drop was on very high volume. So look, you can see where this is going here. To those crash callers out here who have been wrong 100% of the time for years, congratulations for keeping tens of thousands of people out of the biggest bull run in the market in history. Make sure they stayed in the dollar, I guess, and they've gotten decimated. I mean, yeah, sure. Some of them got it right by telling people to get into precious metals, and that's a good thing. There's no doubt about it. At least they got that right. Anyway, look, when dynamics in the market change, you change, and that's it. You can't just be flip-flopping all over the place. You gotta have some parameters that you follow as a teaching point. And then once these change in what is clearly happening now, then you reevaluate. But in my opinion, this has been nothing but a normal corrective phase up until last week, where we got the instability here in the debt market. That's it. One thing led to another. That's all, people. So with regard to this market closing higher, reaching new heights by the end of the year, doesn't look likely now. We must change with the dynamics in the market. As for this month, probably not either. But we'll see. I am just so curious. I can't tell you how curious I am to see what the Fed's going to do to attempt to stabilize the debt market and how that's going to affect inflation. Look, I think it's pretty evident what is going on here. Nothing has really changed. We are quickly and rapidly moving towards a feudal overlord system. This has been going on for quite a while. It's accelerating at this point. And that whole thing is clearly in play. It has been that way for the longest time, and it's accelerated dramatically as of late. So with that said, right now, stock futures are higher. Okay, that means the market is going to open higher. Well, trading doesn't start for about 40 minutes from now, 41 minutes exactly. Okay, now with that said, we're going to keep our eyes on the 10-year yield. All right. If we get another big jump today, you can expect this market to fall. Will it stabilize temporarily? Who the freak knows? Let's see what they do. And we will again act accordingly here. Crude oil, higher today. And again, crude oil and commodities, people, in my opinion, what am I going to say? You're entitled to yours. Crude oil, commodities, really are the spot to be in right now. Okay, if in fact we are seeing a debt market meltdown, what's that going to do? That's going to destroy the stock market. This is the thesis I have explained to you since time immemorial. Okay, people right now are throwing everything out. The baby with the bathwater. You got gold and silver again under pressure here. You got cryptocurrencies again under pressure here. You would expect to see this in an environment like this, and then again, eventually, my opinion, you're going to see an ocean of cash move into commodities and Unless something dramatic happens, yes, we're going to see it go into cryptocurrencies. This is, again, my opinion. Could I be wrong? Could I be wrong? Abso-freaking-lutely. I'm just giving you my best take. This is all I do. When I come out here, I look at the current environment and I say, okay, what are the most likely outcomes? That's it. Okay, it's that's what people like me do. When you are an investor, a trader, a speculator, you're dealing with incomplete information. You try to make the best of it, and you come out with whatever you believe are the most likely outcomes, and you just go with it. Are you going to get it right all the time? Is it possible for anybody, an institution or individual, to get it right 100% of the time? No. I don't care who you are, what institution you are. You're gonna unfortunately get it wrong once in a while. But if you look back on your decisions that you've made, if you can be right most of the time, you're doing pretty damn good, because it's impossible to be right 100% of the time. And you got to accept that. If you can't, then just don't even participate in any of this. That's just the way it is. All right. So with that said, the setup for the market is pretty straightforward. It looks like futures are higher. A bounce at the open. Will it last? Let's see. Okay. Forget about the market. Forget about the freaking market for a moment. Let's see what happens with the debt market. And I'm like, the 10-year yield is the key, as you all know. But the entire yield curve right now is pretty freaking ugly. It's a matter of the entire debt market becoming unstable. And let's see as well how the mainstream financial channels twist this, okay? Because it should be getting more attention than anything else. But what they're going to do, as usual, is make you focus on other things. Look at the stock market. Look at the stock market. They should be telling you, watch the debt market. The debt market is the key. The debt market is the driver. The stock market, as you all know, is a derivative as to what is occurring in the debt. As a matter of fact, everything is. The price action of just about every single asset derives value from what's happening in the debt market. Okay. I think you all know that. At least you should if you've been following this blog any length of time. So with that said, people, I think we still got it. We know what's going on here. This is that moment in time. It very well may be that moment in time that you and I have anticipated, for a very, very long time. An instability in the debt market, a meltdown in the debt market, which is going to destroy global stock markets, and cash is just going to move. Just sit back, enjoy the show, get your nice bucket of hot, buttery popcorn and whatever you like to drink, and just watch it all. Anyway, with that said, people, look, this guy here, right here, loves you a lot. I mean that. We got this. So I will see all of you later. Looking forward to it. And that's it.